Yes, it's afternoon. I'm in Lagos, Nigeria, so I think that's the time zone for most people on the call. It's an absolute delight for me to be here today. I am representing my MD, Mr. Demola Adebise, and of course, I get a chance to appreciate Mr. Segun Oloketui, who was his predecessor and a visionary, one of the visionaries in banking industry that has made it possible for people like myself to transition from other industries into the financial services industry. I also appreciate all the speakers here today, the Royal Heritage family, as well as every one of you that is in the audience and listening to my presentation today. I am truly honored. My name is Segun Adeni. I'm Chief Digital Officer for Wema Bank. I'm going to be speaking today about the extent to which fintechs have disrupted and contributed to the business models of traditional banking in Nigeria. As a form of outline, I will cover a number of things in the very short time that I have. I will speak to the digital banking very quickly, digital banking and fintech landscape in Nigeria, a bit more around who the fintechs are and how they differentiate or what makes them different to traditional banks. Then I would go into some of the ways that some fintechs have disrupted the traditional banking models, how they are emerging into market dominance. There's a big question now whether fintechs have potential to be larger than banks, how technology will shape the future of financial services, what the banks are doing to adapt currently, what the future of banking looks like. And then I would land with a few points, which I would ask that we all ponder in due course. So as a form of, looking at the digital banking landscape, I think the big thing to take from here is globally, financial services today has come under intense competition from fintechs. Agile and innovative firms are leveraging technology to deliver tailored financial service offerings. Today, there are over 100 companies within the Nigerian financial fintech ecosystem. And what that essentially means is there's the need for constant disruption because dynamics are changing. There are new pockets of growth that are emerging, and those are essentially being driven by difference in consumer behavior, multiplicity of funding sources, new business models that are evolving, the fact that our population is becoming more technology savvy and of course more youthful, smartphone penetration and internet penetration, and then of course the fact that relatively we still have a largely unbanked population. The question, who are the fintechs? I'll spend maybe 30 seconds on this because I think Mr. Oloketui did great justice to that. Fintechs, I must set an academic background to start this off. So businesses that use technology to modify, enhance, automate financial services, either to serve other businesses or to serve consumers. They're rapidly changing the concept of traditional financial services. If you think through, they have made things more seamless. They have made financial services faster. They have made it cheaper relatively. We seldom have to think about transportation to our banks any longer, and they are accessible. So they've empowered consumers to take charge of their financial decisions. And of course, one thing we must not take lightly, the fact that financial literacy has now become a norm rather than abnormality before. A lot of times we have always dependent on speaking to specialists, even to take basic financial information. Some of the ways technology or fintechs have enhanced financial services is that access to financial information and the ability for consumers to be able to take decisions quite quickly. These guys could essentially disrupt incumbents, and I think this is where the conversation of fintechs potentially being larger than banks are. They're big challengers. They disrupt the business models that the financial services have in the value chain. They leverage on emerging technologies, so the concept of blockchain, APIs, cloud computing, these are all concepts that these fintechs use in delivering new services. The banks, however, are playing catch up, but the reality is it's a lot easier to start afresh with new technology than having to transition from having legacy infrastructure and technology onto those new ones. So there's that the challenge that could come with how long it takes. Now, the other bit is they can disrupt only the fintechs primarily, although focus on only the financial services, they are becoming a lot more expansive in the way that they do that. So you are seeing impact of them across many other spaces, in payments, in savings and investments, in insurance services, and what have you. Similarities and differences. I think it's important to call that out. It is the same target markets. They're after the same people as the banks. They offer financial service products to customers in the same, in different manners, but essentially that's what they provide. The big area is to look at the differences. The traditional banks require a different type of license to be able to accept deposits and, of course, disburse loans to customers. The fintechs are unable to use those. They can't accept those deposits as store of value, but they can provide services in different use cases across the financial services ecosystem. And one of the learnings for banks in that is there is a huge market just in being able to move money from point A to B. After all, how many people actually have enough liquidity for their funds to sit in banks? We all get funds into a bank account and we make payments to different people who also ride on the banking space. That's one of the areas that the fintechs have definitely gained some strength. The second bit is around the organizational structures. So the banks are primarily focused, again, maybe a legacy learning on the management of financial risk and security, whilst the fintechs have primarily been driven by the need for innovation and consistent innovation, to be honest, and they have built organizational structures to work with that. Again, when you think about it, there's the brick and mortar dependency on banks originally, and we're all now learning to follow the fintech model where we're able to provide services in a digital platform and online and accessible to all customers. The same for ease of followership. Two other differences around automation, which again is something that banks are learning, but it comes from the ease of starting from ground zero. So one illustration I always try to use around that is how easily a 5-year-old will pick up an iPad and understand how to use it and use it extensively versus a 60-year-old, because he has to initially wipe out the concept of having to write on pen and paper before he can digitize his content or his perspective. And then, of course, the last bit is around the delivery channels that are made available. But again, to sort of give some comfort around here, even though these differences exist, the traditional banks are taking very active steps to be able to challenge and displace the fintechs in the way that they also offer. Thank you for listening, everybody, and enjoy what's left of your day.
It was a pleasure. Thank you.
Thank you.
Thank you.
Thank you. Thank you.
Thank you, sir.